G'day folks, Jim here, Monday the 12th of May, thanks for tuning in. Well, the Euro's under a bit of pressure again this morning, really following Mario Draghi's remarks last week about a possible easing in June in the EU. So the Euro, as I say, is a little bit lower. It's taken the Swiss and the cable really with it. Commodity currencies are a little bit pretty much unchanged. The yen's a little bit weaker this morning as well. I don't think we should get too carried away with US dollar strength, though. Janet Yellen was still pretty dovish last week in her testimony to Congress, and of course we've still got the Ukraine situation hovering in the background, so the market's a little bit nervous. But we'll go and have a look at the charts and see what lies ahead from a technical perspective. And starting with the Euro, we've pretty much opened up where we finished the week around 137.5. Now the indicators, this is a 4-hour chart, the indicators are pointing lower. But as you can see, they're becoming somewhat oversold. There's going to be support down around here. This is the 50% pivot of the whole rise up from 134 3/4. That comes in here just under the current levels at 137.35. Now, as I say, the short-term indicators are a little bit oversold, so I think we need to allow for a bit of a rally. And it wouldn't surprise me if we can take out to 137.60. We might head back up to this spike low down at around here, around 37.70. But the first FIBO level's not really seen to 138, the figure, and we're well below the 200-hour moving average. So allow for a bit of a short squeeze, I think, as the market does get itself short early into Monday's session. But eventually, I do think we're heading lower. As I say, the initial support at 137.30. We actually need to go and have a look at the Ichimoku charts. The 100-day moving average is sitting right here at about 137, sort of 35.40. So that will add to some support. And below there, the base of the daily clouds around 137.20. So I wouldn't get too carried away on downside momentum for the Euro today. I think there'll be plenty of buyers into dips, particularly given the short-term oversold nature of the charts. But I do think that in the longer term, we're probably heading low. And if we go back to have a look at the dailies, we are sitting right on the 100-day moving average here at just around 137.35. If we do break that, then the first FIBO support down from this move up here from 127.5. That's at 137, the figure. Below there, we might be in for a bit more of a drop below the this April low here, down to around 136.20 eventually. The daily indicators, they are pointing south still. So as I say, I think in the near term, just look to sell rallies, and on the day, I think if we saw it close to 138, I'd be looking for a sell with a possible stop loss. I guess probably above the 100-day moving average, which is about 138.70, but that's coming south fairly fast. So maybe above the 200-hour moving average. Sorry, I said day moving average. This is an hourly chart. Above the 200-hour moving average at about 138.70. So I think if we sold 138, sell it there with a stop loss above wherever these happen to be at the time. Dollar yen, that has moved up early this morning, and it's reached 102. And on the day, if we go and have a look at the hourly charts, it's testing this 200-hour moving average. Now, if it can get through 102, then I guess we're possibly heading back to sort of 102.20, 102.40 area. Don't really think we're going much above there today. But the hourlies are mildly positive. The 4 hours equally are looking okay. So if we do break above here, then we might see a bit of a squeeze to the top side. Further out though, the dailies are pretty much flat. I wouldn't be getting too carried away in either direction. Let's just blow this daily up a little bit. And we've got plenty of support down here around this 101.20 level. If we go back to look at the charts here, 101.50 even, that's going to support it. We did get down to 101.45 a couple of times last week. Never really liked it down there. We may go back and test this 101.30 low down here. But other than that, then we're looking at this double bottom down here at 101.20, and I don't think we're going there today. If anything, I'd probably be a short-term buyer on the dips, But as I say, I think anything above 102.50 for the time being, I'll probably be looking to square up. Sterling, well, that failed just ahead of 170, and it's come back a little bit lower. It's 150 points off there now, and it's really been pressured down by the euro. But it's coming into the first major FIBO support down around here. It's a 168.20, and really needs to hold this rising trend support. That's down around 167.75, as we can see on the daily charts. A break of that would tend to suggest we've got deeper decline ahead of us, and eventually we could head back to this 166. Where is it? 15 level, which is where the 100-day moving average lies. That's a fair way off at the moment. In the short term, the dailies, as with the euro, they're trying to correct from being somewhat oversold. The immediate resistance is about 168.75, 168.70, something like that. And the 200-hour moving average is not up to just under 169, and I don't think we're going there today. So I'd be a seller somewhere between sort of 168.75, 169.25, looking for the next leg lower, which I think could eventually take us down to this sort of 167.80 level. Dollar Swiss, well, having stopped me and everybody else out on my long position down around here somewhere the other day when it broke that support, it hasn't really looked back. It's just trying to break this FIBO resistance here, this decline here. We didn't quite make it down there to make a double bottom, but as I say, the rally's been strong ever since. Now, if we do break this 88.70, I'm looking for a quick run back to sort of 89.10, 89.20 even, maybe up to this level here. The hourly charts are overbought, and we could, as you can see here, they are overbought. So we could see a dip back here to sort of 88.40 or so. There's going to be some reasonable support around 88.50. I'm looking to buy dips again. I'm annoyed with myself for being stopped out, but that's trading. I think eventually we might see a look at 89 and then beyond. And this the 100-day moving average here at 88.97, I think it was 88.95. That's going to be quite a tough hurdle to overcome. But the charts are looking as though they've got building for some mild positive momentum. So I think we might see 89 taken out. And the first major FIBO resistance after that will be at 89.60. Dips now, I don't think, if we got back below 88 again, I'd be quite surprised, and I'm not really sure we're going to see it much below sort of 88.40.50. So I'm looking to buy dips down there. The Aussie is doing nothing and probably won't ahead of tomorrow's federal budget. It's trading pretty comfortably here at 93.50.60. It actually looks a little bit heavy at the moment. Just in the fact that the 4 hourlies are unwinding a little bit. As the hourlies are really doing nothing, but they've come back to sit on this first minor FIBO support on the hourly chart. A break of sort of 93.5 might take us back down here to 93.20, but as I've said before, I'd be a buyer down there, and I'm looking for an eventual test of this 94 level, and potentially up to sort of 94.60, which was the previous top. But there is some resistance lying right ahead. This is a little bit messy, this chart, but the initial sort of descending trend resistance, that lies around 94, the figure. I'd be a bit surprised if we get over 93.75 today, but if we do take 94, then we're heading back up here to sort of possibly up to this sort of 94.90 area. And eventually, before 94.90, of course, this high here is at 94.60. Eventually, the head and shoulders, let me just take this FIBO out because it's hindering things. So eventually, we've got this, the neckline here, the red line. We have come back and tested it, and eventually the target from the bottom here up to this neckline, from here will be about 95.83, 90. So I call it 95.90. And that's what eventually I'm looking for. But there's plenty of work to be done before we get there. And as I say, this FIBO resistance here at 94.90 is going to be a bit of a hurdle ahead of that. So that's that for the Aussie. I don't expect too much before the budget. The Kiwi, well, that's come having made this high up here at 87.80 or so. It's come back off. It's so far it's held on to 86 the figure, and it's trying to unwind at the moment. It's the hourlies are mildly positive, but I don't expect too much today. The 200-hour moving average is up here at 86.50, and I'd be a bit surprised to see us go ahead of that. This is a 4-hourly chart. They're still looking somewhat negative, but it's not really doing an awful lot at the moment. And as I say, I think 86 or 10 to 86.50 might cover it on the day. The dailies, though, having made a new high and seen this bearish divergence here, I suspect that possibly we are going to come back down and test this support here. This is just under 86, about 85.90. Now, if we broke that, then I think we're probably heading back down here towards 85, 20, 30, which is going to be quite important. If we go below there, then I think we're probably heading back down to sort of the low 84s. But as long as this rising trend support holds, it could just be that we're correcting off the highs and heading for the next level up. As you can see here, it looks as though we are in a bit of a wedge. So, you know, it's not beyond the realms of possibility that we could see another test up here at 87.80, maybe 88 cents. But the longer term high on the weeklies, bearing in mind we made a 3-year high last week, this high up here at this 2011 high, I think that's up at, I can't remember, what is it, 88.42, I think it was, something like that. I don't think we're going to head up there very soon, and it could be that we actually have seen a bit of a top and maybe moving back down a little bit. That's a weekly chart, so don't take too much notice of the indicators on there in the short term. But that's about it. I will just show you the dollar index, if I can just find that, 1 second. Right, here we are, the dollar index. Now, having made this spike lower last week to 78.90, that was immediately after Draghi spoke. It's since reversed there. We had a key reversal day there, and another spike higher. Now, we're sitting at 79.90. There's good resistance just here, right ahead of us at 80 the figure, of course. And then we've got the 100-day moving average at 80.20, as you can see, the yellow line here, and the blue line at 80.48. That's the 200-day moving average. So there's plenty of resistance ahead of us. But the dailies do look as though they've turned higher. They've crossed the MACDs have crossed. And if I try and head out to the weeklies, we can see that the weeklies are pretty flat, to be honest. They're not doing an awful lot. So, as I say, I wouldn't get too carried away with the dollar upside yet. But I do think we could take out this descending trend line. The weekly, 200 weekly moving average is at 79.62. The 100 week at 81.06. As I say, I do think we could take out this trend line. But while Janet Yellen is still very dovish on the outlook for the US economy, and while we've got the Ukraine causing a few jitters in the background, it might be that we need to just spend some more time consolidating between sort of 79.5 and 80.20. But eventually, I think we might see a bit of a move to the top side. As for economic data, today's actually pretty quiet. There's not an awful lot going on, so I would consider that possibly we've got a day of consolidation. But it's pretty busy later in the week. We've got the US CPI and GDP and the EU US CPI and GDP coming up. There's a fair bit out tomorrow, the Chinese retail sales, and there's a couple of other things out of China. We've got the Australian federal budget, of course, tomorrow night, so that's going to be key focus for the Australian market. There's not much out of Japan, and there's little bits and pieces elsewhere. The Bank of England's got its quarterly bulletin on Wednesday, so that'll be worth watching. So that's about it for today then. Have a very good one, and we'll talk to you tomorrow. Cheers.